Today, I want to explain why the SEC likely won't enforce the threshold list rules under Regulation SHO. This is something I've recently linked together which I think perfectly explains why the SEC sides with these hedge funds and doesn't protect us retail investors. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Liz Hoffman tweeted saying, "Hear it straight from the horse's mouth." David Lauer, a FINRA Market Regulations Committee member, admitting that FINRA is here to protect the brokers, as that's where all their money comes from. It's a huge conflict of interest. Now, I think when watching this video, you have to ignore David Lauer fighting for retail protection, basically fighting against the SEC and those short hedge funds. And remember that Dave Lauer is actually a FINRA Market Regulations Committee member. Basically, Dave Lauer works for FINRA and wants FINRA to succeed, and he wants FINRA to make more money. And how does FINRA make more money? Well, all of their money comes from protecting the brokers, not from protecting retail investors.
I don't like having to defend FINRA. Don't get me wrong. You know, it's frustrating. They're here to protect the brokers. The brokers pay for FINRA. That's where all their money comes from. It's a huge conflict of interest. They have. Oh no, it's like the.
Now that clip is actually pretty hard to hear, but Dave Lauer basically said that he doesn't like protecting FINRA and he's not here to protect FINRA, but FINRA have to protect the brokers because that's where their money comes from. And Liz followed up saying, "Who actually protects America's investors, because FINRA clearly doesn't." She said, "We the people nominate Jon Stewart to be an advocate for free and fair markets." Now you may be saying, "Tom, how exactly does FINRA and the SEC make money from protecting these brokers and actually protecting these short hedge funds as well?" And the answer is an SEC fee. Now again, you may be saying, "Tom, what actually is an SEC fee? What's the definition? What actually is the rate for the SEC fee? And how exactly does it work?" Well, an SEC fee is a nominal fee attached to the sale of exchange-listed equities, regardless whether you're selling equities you hold or selling, aka shorting, equities you don't hold. There's no SEC fee involved with buying shares, only an SEC fee involved with selling shares, aka the SEC wants you to sell your shares or sell shares in general and doesn't really care whether you buy and hold them or not. This SEC is above and beyond any associated brokerage commissions, aka an additional fee on top of those brokerage commissions, which may ultimately be absorbed by you, the investors. After 2007, the actual fee was slightly increased to 1% of 1/800th of a dollar value of the equity sold. Now obviously 1% of 1/800th, aka what's that, 1/80,000th of every single dollar that you sell worth of securities, doesn't really sound like much, but when you consider that brokers process billions if not trillions of dollars in volume every single day, the SEC actually makes quite a lot of money from this. So it says the SEC fee is a small fee that exchanges and broker-dealers, aka Citadel, must pay to the US Treasury to help offset the governmental cost associated with regulating the equities markets. Most of the SEC fees are shouldered by those broker-dealers, aka again Citadel, who in turn may pass the costs along to investors. aka the SEC receives money from those broker-dealers and not directly from you, the investors. Yes, the fee may be passed on to you and I, but it's ultimately the broker-dealers that pay money directly to the SEC. And again, it says this fee is based on the volume of shares traded and applies to only the sale of stocks, but not to the purchase of stocks. aka the SEC loves the selling and shorting of stocks, but doesn't really care much for the buying and holding. So therefore, the SEC and FINRA quite literally protect the broker-dealers and those market makers because that's where a good chunk of their money actually comes from. The reason why Gary Gensler can't afford coffee and can't afford sugar in his office is because Citadel actually need to sell more securities and pay him more money. So if anything, Gary Gensler is basically encouraging the synthetic shorting of securities because the more shares that Citadel sells, the more money Gary Gensler gets for his coffee. Now, Tony actually asked the SEC directly exactly what they're going to do about AMC being on the Regulation SHO threshold securities list, and they basically fobbed him off with a really rubbish answer. You guys be sure to join me over on Moomoo, the sponsor of today's video, using the link in the description below. You can currently get up to 17 free stocks, entirely commission-free trading, free level 2 market data, and Moomoo is very easy to use and has a very simple UI. They've also got tons of technical indicators and advanced charting tools. And with Moomoo, they've also got free 24/7 customer support, and with Moomoo, you can even trade around the clock. The The SEC said, here is information about Regulation SHO. Participants of a registered clearing agency may have failed to deliver in a particular security due to normal settlement processing, which causes the fail position in individual securities to roll on and off over time. The securities may remain on the threshold list due to these normal settlement processes by clearing participants and not due to any individual participant failing to close out short positions. Okay, they've basically said that AMC may just be on the Regulation SHO list due to normal issues with normal clearing settlements. It may be nothing to do with shorting whatsoever. But they then also added saying if you actually believe that it is due to shorting, please let us know and we will investigate. Again, they didn't really answer the question whatsoever, and they didn't really give a specific response to AMC as to exactly why it was on the Regulation SHO list in the first place. And Donahue George recently found an article from Forbes which actually states the SEC has even given permission to banks to naked short IPO stocks so they wouldn't lose money on the IPO. And that's why Donahue George believes, again, the SEC doesn't work for us. And again, this also comes at a time when the FTDs for the first half of February have now just been released. And guys, they're even larger than the January FTDs. Back in January, we saw between 1 and 3 million FTDs every single day, but in the first half of February, we've even seen numbers as high as 6.8 million and 6.8 million again. These broker-dealers are continuing to fail to deliver AMC shares, and the problem is getting worse and worse. Now, it seems the SEC may not do anything about it due to the fees actually involved that they received, but what I think we should do is really put pressure on Adam Aron and AMC. I think Adam Aron and AMC may not be able to go to the SEC to do anything specific about it, but I think if Adam Aron speaks on it publicly, it will have a massive, massive impact. We can see that Adam Aron receives hundreds of thousands of impressions on his tweets, if not receives millions of impressions on every single tweet that he posts. Therefore, if he did go public with this information, it would be seen by millions. It wouldn't just be seen by 10 or 20,000 people that see my tweets and watch my videos, it would be seen by millions. I think that would really be the perfect way to expose exactly what's going on and effectively force the SEC to change. Now, you may have obviously seen the frivolous lawsuit attempts against AMC and the misreporting on these lawsuits by Seeking Alpha and a number of other news articles. Obviously, a lawsuit was filed in Delaware court and Seeking Alpha started to report the ape conversion will be delayed until at least April 27th. But as Phil for Real tweeted, it seems Ali Jenny really messed up in today's hearing. He said AMC put them on the spot, and first they said in court, why did you wait until now to file this lawsuit when ape was distributed in late August and the split was announced all the way back in December? And they added saying filing documents have come out in December, January and February talking about the vote. So why did they wait until the end of February to submit the lawsuit? The courts actually want everything dealt with by March 8th, even before the AMC vote. Ali Jenny said they need more time and the judge said okay. The court date has been pushed back from the 8th of March to the 10th of March. Apparently AMC even offered to hold off on the conversion and split if the vote was yes, but the judge actually wants a resolution by the 10th of March, even before the vote is announced. As I suggested at the very start, it seems this lawsuit won't go very far in terms of deterring the AMC reverse split and ape conversion. And finally, Suspended POS tweeted something very, very interesting, which is two separate articles coming out from the street that seem to be very, very bullish. They first posted the article saying AMC stock is the mother of all short squeezes on the table right now. And they also added saying could a Q4 earnings beat be a short squeeze catalyst? I don't know whether these hedge funds and institutions are going to try and push AMC up or down after the earnings announcement tonight, but I do think it could be quite a volatile one. It's really weird these mainstream media outlets are all of a sudden turning bullish on AMC. I don't know whether they're trying to trick us into buying AMC calls before the Q4 earnings, or if they're going to change bullish and say, guys, we told you so, AMC is a great company and is just about to squeeze. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.